I think we're live. We'll see. Hey, welcome to Small Account Swing Trading. I'm Jason, and we're going to do a special live edition today to kind of go over it. We've got a down day in the market, so I thought looking at how your portfolio looks when the price goes against us for a while, but the importance of setting your risk and picking the proper delta kind of absorbs some of that. Even though the numbers look red, you're still within the probabilities that we initially set when we open the position. So I'm kind of going to go over that in the portfolio, go over a couple positions that have gone against us, and show that how the picking the right delta as well as setting the plan for proper risk management at the entry, which is really all we have control of, how it can really help us on down days like this. So let's get into it. So we're kind of looking like, if you got last night's update, we really got a good push on our SNXX position. It's an equity account, so I think I'll go over the shares positions first. So we'll put the filter on stocks, but as you can see, we sold off pretty good today, and we're almost right at where we entered the position. So, but that's part of our risk. What I said, when I do swing trades and they go the direction that I'm expecting them to, I usually have the 21 SMA as my guide to follow it up, so to try to let the stock continue higher, and I have a trailing. Basically, it's like a trailing stop of the 21 EMA. And you can see we've kind of bounced off of it today. We pulled back to that. We also pulled back to this level right here, which is where we entered. That was our breakout level. So we broke out, we pulled back. Now we're doing a retest. That's what we want to see. In a healthy market, we want to see a breakout, and then we want to see a retest. And then we see if those buyers decide to step back in and push the stock higher. That's how stock markets move. They don't just go straight up. I know they don't just do this. They usually come back and retest those other layers of resistance and turn them into support and continue higher. Just like this right here. We had a breakout. We ran up. We pulled back. We come back and tested, and we pulled a bit lower. We tested the bottom of that, and then we went back up again. Here we almost come back to this level. Probably if we see, but this is a daily chart. You can see that there is a level there, so we broke out, but we really didn't pull all the way back and test it. We continued higher. So there's a potential that this stock, or this is an ETF of a stock, SNDK, that it could pull back to this level right here, 56.60, and you have to be okay with that if you entered. So this is where you want to enter. Like in my case, I played the breakout at 80. I have to be okay that it comes here. I set my risk at two of the ATR, which was around 9 for this stock. So when I assessed what position size I wanted to get into, I factor in that ATR so that I wouldn't lose more than what I'm willing to risk in this trade, which is 1% of my account. So if this pulls back 18 points, it's going to be about $135, and that's my risk. And I'm looking to try to get 2 to 3x of that on a swing trade at times. If I'm selling a put credit spread, which I'll just show you that in a minute, but that's what I'm doing when I do a swing trade with stocks. I'm trying to get 2 to 3 or as much as I can out of it before it pulls back to the point of me stopping out. So we really wouldn't close this position until it closes in the 21 or hits our full 2 in, or 2 times the average moving the ATR. So we're doing okay with that one. I hated to see the unrealized profits go back down to 36 from 250 like we were yesterday, but that's what happens. TJ Maxx, once again, it's been trending sideways. Same thing, still hasn't, but that's just kind of a average support level. So we're looking for a breakout on that one. That's an easy one. BG, same thing. I think we're trading sideways on this one. So we're looking. These trading sideways probably would have been better to sell a spread, because if it goes sideways or up or down just a little, we still get our profit. So these are kind of. I know I used a different way on FinViz. I explained that last night in my show. I played at the bottom of that channel. I used the filter for channeling up on FinViz to pick these positions, which is why I went with the stock options instead of selling the put spreads. 5 below, same thing. We're kind of really trending sideways. We did get a pop there this morning, gapped up, and then we pulled back and closed that gap, it looks like. So right now we're sitting above that 50 SMA. And going sideways again, which is good. The market's down 50 ES, Nasdaq down nearly 400, and but the boomers, the Dow, it's up 41. So we're back to what was that, consumer staples, probably staples. Although Walmart was down today, we'll go over that one in a minute. We got next. Now this one. I don't know why it's showing up when I'm doing options. Next was actually options playing down a stock play. Oh, okay. I know why, because it's showing pending. What about that one? And Tilray is not a stock. It's just got to have orders in pending. That's what that is. So those are the 1, 2, 3, 4 stocks that I actually have shares in, as opposed to put credit spreads. So let's go over those now. Now, when it comes to risk on the put credit spreads, we'll start with this one. Now, this one was up almost 50% yesterday, and that's kind of the importance of the tasty trade methodology, is closing these out when they get to around 50%, is because you never know what the next day is going to bring. So this was up 50%. We actually ran up to 125 overnight, and we opened and went nothing but straight down on this one. So it would have been nice if we'd have got to close this one out for our 50% profit, but instead we get to wait it out for earnings in about 17 days. So, but like I said, we're still, our strike is 105 and we're at 114. So even if we ride this one out all the way to earnings, we'll still collect what we sold it for, and we sold it for $1.35, so that's $135 in our pocket as long as we hold above 105. But you can see, this is the intimidating part with selling options. There's a lot of times where your numbers look red, and that's just because it's all based on probabilities. And when the stock goes down, $7 is a lot for the stock, but we're still within our probability of being profitable. And I should show this on this one. Let's go to our table, and you can look at when I entered the trade. I entered at around 25 delta. That means I have like a 75% chance, based on those the formula. There's a 75% chance I'll wind up being profitable, or that's a 75% chance that this short strike is going to get tested. Now there's a 70% chance. So we lost 5% chance, or 5%. We were 0.25 when we came in, but we still have a 70% chance of this still closing out of the money and us collecting a profit. So we're doing okay. That's why I pick a 25 delta as opposed to at the money. At the money is a very aggressive bullish position, but you collect the most premium for your contract, but you have very little leeway when it comes to a pullback. So that just depends on your risk tolerance, I guess, is how you would put that. IWM, that's one I sold. We were up a little bit, 277. We kind of pulled back. We're trying to stay above our 270 strike. We're right now at 273. So a little bit of pullback, but we're still within that Darvis box range. The Darvas box we pushed up, we pulled down, and we trend sideways for about 3 or 5 days, and that kind of forms the box. So we've kind of done that. This was our breakout. But once again, when we talk about support levels, this orange line is the previous all-time high for the Russell. But we did gap up, and there might be a chance to where this pulls back to close that gap and this other support level. So there's a chance that we could go back to that 270, but we sold our short strike at 270. So we're just hoping that over the next 3 days we stay above that 270 and collect that profit we sold. So the premium we sold for it was 46 a contract, and we did 3 of them. So we'll see on that one. Plantier, this one has been a thorn in my side. Software has just really been beaten up pretty hard, and we got kind of a push back upwards when the market bounced earlier in the month. But as we've been pulling back slowly, Plantier is one of those ones that have been hit pretty hard. We're short strike at 135, and we're currently at 141, and we can check that. Our probability of profits 36, so we've got about a 60% chance on this one. So this one we'll have to be proactive on. It's got 17 days and probably before earnings. 6 days. This is going to be an interesting. We've got 6 days till earnings, but we're out 17. We may have to do something with that one. I wonder why. Did it not have the earnings listed? Yes, usually you get to see. Oh, that's the IWM. See, normally you see the purple there. And I'm out 17 days. I wonder if they. Oh, that's odd. I rolled that. Did I roll it? Let's see the activity tab. No, I just opened it out. Maybe they didn't have the earnings listed yet. Oh, could have been an easy mistake. That's 6 days till earnings. That's going to be more risk than I want to take. We'll give it some days. Get closer to earnings. We'll see kind of how this one works out. This will be. We'll take a note on that one. Right now we're down on the position 70 cents. We've got a lot of distance between where the stock is at right now and our short strike. We'll keep monitoring that one. We may either roll it out further in time to kind of counteract the earnings play, or go ahead and close it for a 1x loss. Let's see, I sold it for $1. General Mills is still trending down, although it's one of the green stocks today, which is kind of nice. I did roll it out earlier in the day. It popped up, and I went ahead and rolled it out in time when that happened to try to collect more premium and push out that expiration date to I think they said reduce your cost, your base cost, but essentially you just keep collecting credits till your plan works out. Walmart, this was a big drop off. Boy, did we go down. These are I think 15-minute candles. Yeah, so in 15 minutes we went down nearly 3 points. That was a big move. And then we continued further down. We've kind of bounced since then, so we're kind of almost where we opened, which is not too bad. But as you can see, look at that red number. It's amazing. 3% on a stock like this really makes it look worse than it really is. So if we go to our ahead of earnings, see we're right at the 50-50. So we're at 46%. So actually there's a more likelihood of us being in the money on this one now than what we were before we started. And normally, like, that's the other thing about even selling premium. My strategy is a little bit different. Normally, a lot of people would have a 2x or 3x loss on this one. So, for instance, I sold this contract, or two contracts. I sold the contract for 92 cents, which is $92. Um, so, if this did go against me as soon as I sold it, um, 3x of this number would be kind of cut my losses. That's usually how I manage these. But with or if I wasn't doing the my small account wheel strategy. So in this case, what I'll do is when it gets close to expiration, based on this number, I will flip it. I will close this trade and then sell or buy a call at the money 6 months out, and then I will, at this short strike, which would be 128, I will sell in the near term. I will sell calls against that, and I'll continue to manage that until the price recovers and closes back above our 128, and then I'll continue my campaign of selling put credit spreads. So that's kind of a bullish strategy, but it's a wheel strategy that I really have played for several years now, and I really like it. Tilray is really just would you say a lottery ticket with my brother to see if this thing goes up to 12. That's the goal. We would like to hit this 14, 12, 14, anything. I sold these when it was like at 8, so anything above 8 before the end of the year, these should become profitable by then, and I'll be able to close all this out for a profit. And then Oracle, that's probably the biggest seller. Look at this, what happened to this one overnight. We sold off, like we had a good rebound here. We sold off overnight, and but looks like we bounced what, right? See, even then we drove right through where our previous resistance was. So that one is kind of barreling over, and we're down past our 21. That one we'll have to monitor with our once again, I'm using the wheel strategy, so normally you would look for this number here, what we sold it for, times 3, and right now we're only, but I've got two of them. I've got a long-term one for 51 days, and then I've got the short one here for 3 days. So this was the dollar trade here. If we were $3 here, that's when we'd close this one out. So we're 2 of it, so you're at the 2x. So we might be getting to, at the end of this week, we might be able to get a version of, with the group, of how I'll create the wheel strategy. I'll close this position, then sell the deal. We'll go through that, and we'll get a good recording of that, so that'll be fun. But that's basically my positions. You can see we're a lot of red on the board, but we're only in the money on 2 of them. We're really close on Walmart. It's been in the money, out of the money, so hopefully that'll keep pushing up. But anyway, I just thought there might be you might enjoy a live version of this. I don't see anybody in the chat, so I was hoping maybe some questions would show up, but I'm not seeing any. But I'll keep you posted throughout the day. I might do a couple shorts, but if you'd like more information on my strategies, how I trade a small account, and just leave a comment in the description, and I'll make a video about it. Or we might do another live stream next Tuesday when I'm at home from work, and we can discuss it live. Or maybe even your trade ideas. I'm open for just anything. So take care now. Bye-bye then.